All right, I'm gonna make a quick video going over the gold trade that happened this morning, and we're just gonna establish the reasoning behind why this trade happened. All right, so from the daily perspective, we've had a continuous expansion to the downside because of our weekly swing point that was established. C2 candle was created, it swept, and now for this week, we were anticipating the candle 3 to continue its expansion downwards, right? So from this point, we're establishing that we're looking for an external range to internal range based off of the weekly time frame, right? Now, where is our range on the weekly? Well, as we know, a trend moves from swing point to swing point. So if we've established the high point over here, where is our lower end swing point? Well, it can be found over here. We have a swing point coming down from here, expanding. We had a trend week by week. Now we've established a swing point at the high. This is our range, our weekly range, right? So from here, if we just swept the external over here, now we can look for for price to come back into the internal of the range. So from external to the internal. And if we're looking for price to come back into the internal, our targets will be the fair value gaps, right? So draw out our fair value gaps. Now, these were our targets this week. Also, we can see that the monthly, we're creating that wick of the monthly. So when we're profiling from the monthly down to the weekly, we can expect the monthly wick to create that swing point. So the monthly wick is the weekly 3 candle swing point. If we come down to the weekly, from the weekly to the daily, now we have a more accurate perspective of what's going on based off of this C3 candle that we're anticipating for the week. So the week opened up, retesting this order block. Okay. Expanded up, created the wick, flipped it from the open, and continued to expand down towards the fair value gaps because of that higher time frame, external to internal framework that we're working with. So now we want price from the weekly point, because we've established that range, to come into discount. Discount would be below the 50% range, right? So I'm expecting price to continue down into this fair value gap tomorrow. So in terms of today, we made this fair value gap. Yeah, give me a second. I'll call you back. Yo, give me a sec. I'll call you back.
Okay, ciao.
Ciao. All right. So from the daily point of view, we've created our wick for candle 3. We flipped the open, continue to expand down. Okay, this was Monday. Tuesday, continue to expand down, created somewhat of an indecision candle. And Wednesday, because we're on the sell side of the curve over here. This side of the curve is the buy side of the curve. This side of the curve is the sell side of the curve. And the tipping point of that is the swing point that we've created over here on the weekly. So as we're pushing down from the daily, now we can anticipate an internal range, right? Internal range. And our targets to be at the external range. External range over here. Okay. So coming down from the daily, now we can do the same logic, right? So we're going to look at the daily candle over here that we've created. So profiling this daily candle, we come down to the 4 hour, and we can see that we opened up 1800 over here. And all morning, we've been expanding upside towards that internal range fair value gap in the context of the higher time frame sell side of the curve. Now, let's look at what time we had this sweep and the creation of this swing inside this internal range. So 2 a.m. expanded up, 6 a.m. swept the high, and the candle for 6 a.m. closed bearish, right? So this creation of a C2 candle on the 4 hour, 10 a.m. over here, 10 a.m. opens up over here and confirms our C3 candle and continues to expand down. FOMC was at 2, and we continue to expand down, like following our narrative of the internal to the external. So regardless of what the news is doing, it's always going to overarchingly follow the narrative. Okay, so profiling this 4 hour framework. Well, actually, also forgot to mention, same thing over here. We have the wick open up. Well, the creation of this wick created this swing at the top. Okay, and I can pretty much guarantee you that there's some type of an SMT at the top over here. Okay, so again, it's always the same routine over and over again, the same logic, working towards finding our setups, looking towards understanding the markets and reading what's happening. 4 hour, we have our swing, we have our continuations off of this swing. So still the same thing over here that we saw on the weekly. We have the buy side of the curve, establishing the swing, tipping point with the SMT, and now we have the sell side of the curve. Okay, so from the 4 hour, we jump down to the 1 hour, right? And on the 1 hour, we can see that, I'm going to delete these. So on the 1 hour, we can see that we had a swing here. Now we have a swing within a swing. So we have the 4 hour high over here, but see how this wick is creating the new swing over here? So same idea, we're profiling down, right? So we have a swing within a swing, and we have price respecting the order flow coming to the downside. Right? Makes sense. So now we can move down to a lower time frame, 15 minute. Now at this point, right, because we're at the top of the swing of the C2 4 hour candle, we can try and find our 4 hour change of state in terms of time frame alignment. So which time frame is aligned with the 4 hour? It's the 15 minute. So the 15 minute, we're going to try and find our change of state. And this is exactly what happens here. We have our change of state. We have our C2 here. 10 a.m. opens up, expands into this order block. That's also a change of state. They're both synonymous. And along with our change of state, we have an inversion fair value gap right over here. Right? So at the inversion, we create the inversion, and over here we also have another confirmation, which was the SMT. So again, we come back into our narrative, right? Internal, and now we're aiming for the external. Now along the way towards our external, we don't have to catch the full move, but we can capitalize on taking profits along the way at important key levels, such as the daily open, because if price is to turn bearish, we have to, coming from the buy side of the curve towards the sell side of the curve, pass through the daily open in order to flip and create that bearish candle. Well, that's an easy target if we're bearish. And if we've already established this tipping point, swing point in the market for the daily range. So as we start coming down, every retracement is following the order flow, right? So we can see that all of these order blocks are being respected. Order blocks are being respected. Fair value gaps are being respected on the sell side. And we're just continuing downside. Now it's all about just following the order flow from this point out. I took my entry around the internal range, internal fair value gap over here after establishing the change of state of delivery. And from here on out, just continuing the order flow down. Now, easy target, 1800. We also had this, if you want to look from the hourly perspective, we had this hourly fair value gap over here. This was also another easy target, right? Fair value gap here, 50% of the fair value gap. This was my safe zone to just take my profits. If you would have entered right at the 15-minute change of state at the high, down to the 50%, it's a 1.95, basically a 2RR, very low hanging fruit, very easy, very obtainable, and it all makes sense in terms of the logic.